friends of mine who are in the business who sell coins, and they're confirming to me that, they just can't get certain coins. And, people call up and they want to buy coins, and they can't sell them because they don't have them, and it takes a long time to get delivered. And, recently there was some news with the Perth Mint where they're not able to deliver the coins in time because there's just so much demand. And, they have to make them, right? And they have some equipment, and they're used to a certain volume of business, and they make coins, but all of a sudden there's a lot of demand for the smaller denomination coins, and they just, they're backed up in their ability to fabricate them. Now, if you want big bars, those are still there, but so it shows to me that the demand is really coming from average individuals around the world who are starting to wake up to what's going on and who want to own gold. They don't want currency. So I think the recent decline in the price of gold is the big-time leverage speculators who, own the big bars and own the futures contracts. They're the ones that are selling because they have to. But average people are buying because they want to, and I think this is the beginning of a bigger trend as more and more people are going to buy. And, if you're having trouble buying gold, I still like buying it at the Perth Mint because you can buy your gold right now at today's prices. And, if you want to take delivery of your coins, at some point you can take delivery of them and, let this thing pass. Because at some point, what the Perth Mint is probably going to do, this is a big government mint. And all of a sudden there's a big surge in demand. They don't really know what to make of it. They don't know if they're going to go buy more equipment. They don't know, is this a temporary thing? Is this a permanent thing? But if this is a permanent increase in demand, obviously at some point they're going to get the government approval to make an investment, and they're going to be able to buy more machines, and they're going to be able to satisfy the demand. And then at that point, you can go ask for your coins. But I know that there's a lot of people right now who are buying coins, and they're paying huge premiums over spot to buy it. And I think that's a mistake. I think that they should wait. I think they should try to, buy, let's say, the Perth Mint or something. Do not pay $50 or $100 or $150 over spot. There's no reason to do that. But eventually, what's going to happen is when you get a lot of demand for these small coins, then the mints around the world will start making more and more of them, and eventually the market is going to clear. But I think it is a good sign that people around the world are, in fact, waking up. And I pointed out this stealth bull market in gold. People keep talking about, gold's not doing what it's supposed to do. Look, gold's only 800. That was 1,000. That's all nonsense. Because if you look at the price of gold relative to everything else, it's held up. Gold made new record highs in Australia, in Canada, in South Africa. It made a new record high versus the Dow. At one point this week, gold, the Dow was worth fewer than 10 ounces of gold. It started the year at 15 ounces of gold. So gold did well versus stocks. Look at how well gold has done versus other metals, industrial metals. Look at how well it's done versus oil. Right? When gold was 1,000, oil was $140 a barrel. Now oil is $54 a barrel, and gold's at $800. I mean, it's huge. So gold has done very, very well. People don't understand how well gold has done because they're simply measuring it through one currency, the dollar, and they're looking at everything else. But once this phony dollar rally ends and the dollar starts to fall, then I think the pace of gold's rise is going to really accelerate, and it's going to catch a lot of people by surprise.
I understand the bullishness about gold, but my question was regarding the COMEX gold, which is, they have a futures contract in December which is going to expire, and all these people who've been buying those futures will ask for physical delivery because they've been running out of physical gold. Is that
somebody could do that, and obviously that could create a lot of problems for the COMEX if a lot of people who have contracts want delivery, especially in the silver market, but that could happen. I mean, there's no doubt about that.
So these dealers were saying that there are some banks which are heavily shorting gold to keep it down, the manipulation and stuff. Is that true?
Excuse me?
I was asking if the manipulation happens in the gold futures market.
I can't understand the question. I guess I can't understand your accent.
Okay. My second question is regarding the gold going to 2,000. You predicted in the CNBC Fast Money show.
Uh-huh.
And I was wondering what the price of relationship irrespective to the silver and oil when gold goes to?
Well, I mean, I think gold is going to do better than oil, and I've said that. I think that gold is going to regain its monetary status, and as a result, it's going to have a very spectacular rise relative to all commodities. Now, whether you want to look at gold versus silver, I do think there's potentially more upside potential in silver. I own both. I own more gold than silver, but I potentially think that silver could do even better. But anyway, thanks for the call. Appreciate it.
Thank you.
Hey, I'm just looking at some of these stocks opening. It shows some crazy volatility. Like I'm looking at one of the stocks we own in Australia, which is now up 60% from where it was 2 days ago. I mean, 2 days ago it made a new low for the year, and here it is 60% higher. I mean, and there's a lot of stocks like that. I mean, I look at these stocks and see this is how crazy these markets are. I mean, obviously, there's nothing that happens between 2 days that makes a stock worth 60% more than it was a couple of days earlier in general. But it just shows you that, people that might have panicked and sold the stock a couple of days ago, the trade hasn't even settled yet, and they could get 60% more if they still held the stock. Now, the stock is still down from where it was 6 months ago. But who knows? I mean, if the stock can go up 60% in 2 days, what if it goes up another 60% in another 2 days? I mean, this is, when people look at their accounts and they think, oh, gee, I'm down 50%, it's going to take me 5 years to get my money back at normal rates of return. But why would you expect a normal rate of return? If your account lost 50% of its value in a few months, why would it take years to get it back? Especially when the stocks didn't go down because of problems with the company. They went down because of the liquidity problems of their shareholders who were desperate to sell. And remember that a large fraction of these declines, if we have a stock that's down 50%, chances are the stock's not down 50%. Chances are the stock's only down 20 or 30%. It's the currency that's causing it. So what happens is you get your money back not because the stock goes up. The stock, that's part of it, but because the dollar stops going up and the foreign currency goes up. So while you might have to wait a long time if you were in a U.S. stock to get that kind of appreciation, you won't have to wait a long time when it's in a foreign stock when it's happening in the context of a falling dollar. Because it's not just the stock that's making the money, it's the currency. So I don't think this is going to be a long time. Not at all. I mean, I think before long, these paper losses are going to be mere memories, and more of our clients are just going to be kicking themselves for what they could have done and what they should have done, which was buy more. I mean, people are going to look at these stocks and say, oh my God, I could have bought it for what? So what an idiot. Why didn't I buy more of that stock when they were giving it away? Of course, you'll know, because when they're giving it away, everybody's too afraid to buy. Everybody is scared. Nobody wants to buy. Everybody wants to sell. That's why the prices get so low. It's only after the fact, where the prices rise, that people are saying how dumb they were for not buying. But, of course, they don't remember how fearful they were at that time, and that's why they didn't buy. But, of course, after the fact, when the prices go back up and you're not scared anymore, now you can say, gee, I should have bought. But, of course, at the time, that's the last thing you would do because you're so scared. But anyway, let me go to the next caller. Is John from Illinois.
Hello, Peter, and happy Thanksgiving.
Hey, John.
I participate in my employer's defined contribution retirement plan, and we choose from a list of mutual funds and similar vehicles. I would like your help in choosing an international fund. I have only 2 options within my plan.
What do you got?
One of them is fairly traditional. The top 4 countries represented are Germany, Japan, UK, and Switzerland. The other one is a bit unusual, I think. The top 4 countries are Japan, Bermuda, India, and the Cayman Islands. Any thoughts just from that information?
Well, those other ones sound like if they're in the Cayman Islands and Bermuda, those are generally tax havens, and so if they're invested in there, they might be holding companies that have other assets in other markets. So what you really want to try to investigate is what are the actual stocks that they're investing in? What companies do they own? And, it's probably not an all or nothing choice. You can probably have money in each one.
Yes, I can.
Yeah, but that's the thing. You got to try to look at, and the kind of companies I like are, the ones that are not big, focused on the U.S., that